You were listening to chartingwealth.com for Monday, the 10th of October, 2016. Markets are down, both on our weekly and our two-day chart. And for the day, total market down 0.38%. That's paralleling the down moves in our two-day chart since the 24th of August. We saw the market slide sideways for a while, drop big time in early September, rise up in mid-September, and it's been sliding sideways and down since that point. The market ended down on Friday the 7th, 0.38%. If we look intraday from our two-day chart, we see on the 4-hour chart market had a lot of movement up and down. In the morning, we've got basically a spinning top, lots of movement, a wick up and a wick down. Then in the afternoon, down. We see the derivative oscillator continuing to move down, and the MACD, that's the moving average convergence divergence indicator, and the signal line both moving down. So we have a market that continues to head down. If we look at the two-day chart, we can see, like we said, the market has been going down. It actually closed below the weekly trend line. We're going to, as soon as we finish up this broadcast, we're going to do our weekly review and forecast where we will review for you what's going on the weekly charts, what moves were made by the news this last week, what really pushed the market, and what may be affecting the market over the course of this next week. So let's jump now from the total market to the S&P 500. Again, those are the 500 stocks that make up the S&P 500 as depicted by SPY, an exchange-traded fund that tracks the S&P 500. We can see that the weekly chart is down, the two-day chart is down. We had a down day, 0.34%. We've been going down on the two-day chart since the market crossed over on the MACD, going down on the 24th. The derivative oscillator flipped over on the two-day candle on the 26th. Those are both of August. Market then slid sideways for a while, really rocketed down the 9th and the 13th of September. Gained some moves back up through about the 3rd of October, then it started moving down again. Never got out of a down move on the MACD. The derivative oscillator has continued to lose energy, even though that is downward momentum, even though the market continues to trundle down. The MACD and the signal line are both moving down at this point. Let's see what went on intraday. We see that the market crossed over in the morning, going back down. That was a good entry point. On an inverse move in the S&P 500. Lots of movement above and below the candle, big wicks, and then lots of down movement in the afternoon. Derivative oscillator on the 4-hour chart is moving down at this point. That is where we are as we came to the close of business on Friday with the S&P 500. What do you see going on this chart? Well, we see that the Bollinger Bands have tightened up substantially as the market slid sideways. That, of course, means that we have a lack of volatility, although, like we said, the market is moving down. Now, let's go from our 4-hour chart back to our two-day chart, and let's take a look at the Qs, down 0.22% for the day. The Qs, however, is a continued up move on the weekly chart. We are in a confirmed up move on the weekly chart. The Qs has continued to run inverse to what we've seen on the S&P 500 in the total market. Switched over going up on the derivative oscillator, back on the two-day candle on the 9th. And then we have a big doji ended the day on the two-day candle for the 7th of October. Lots of indecision there. Now, the last doji we had, the market then continued to move back up. But let's look at this a little more in depth. The market on the 23rd of September, that two-day candle, actually reached a high that it barely pushed above in the last two-day candle on the 5th, but that's about as high as it's gotten when we look at the top wick. In fact, it's hard to tell if we even went that high back on the 5th of October from that high wick on the 23rd of September. What do we see happen over the course of the past two-day candle that ended on the 7th? Well, We've got a doji, which is a Japanese candlestick pattern, which means the market is in a great deal of indecision. We're still in a confirmed down move, although the derivative oscillator is up. The MACD, our big signal line, is moving down along with the signal line itself, our big indicator. So what is that telling us? Well, that, again, and we've also moved inside the Bollinger Bands there. So we're still above the 2-day trend line and the weekly trend line, rather, on the Qs. But what we see going on here is really a lot of questioning as to how high that peak is going to continue to go. So we're going to watch that closely. Now, let's go back to and check out our 4-hour chart. What do we see going on there? Well, crossed over going down in the afternoon on Thursday. And of course, it hammered down on Friday, actually down 0.22%, but those candles are telling us what's really going on. Derivative oscillator really lengthened substantially in the afternoon on Friday the 7th. So we did have an entry point on a down move. So again, pay attention to that. That is important for you to see. Again, our only trepidation is that our weekly trend line, our weekly chart on the Qs is actually in a sustained up move. Now we'll check that out again at the end of the week on our weekly review and forecast, so pay attention to that coming up next. Lastly, what's gold doing? Well, gold technically on Friday was up 0.07%, 0.7%, hardly up. We have huge hammer down candles on the 2-day charts, on both the charts ending on the 5th and the 7th. We're still in a confirmed down move on the weekly chart all the way back to the 8th of August. If we look at our 4-hour chart, what do we see? We see gold continuing to move down. I tell you, that 4-hour chart is magical. Started moving over, going down back on the 28th of September. If you jumped in, man, have you done well in an inverse trade in gold. Continue to pay attention to that. Also pay attention to the fact that we do see our MACD kinking over. It's not going down like it was before. It's almost paralleling. And we have our derivative oscillator losing energy. So if you've made a killing on your virtual trade in gold, getting all the way down to about 119 from the crossover point at about 125, 126, man, take your money and enjoy it in that virtual trade. That is where we ended the day on Friday the 7th. It was going to Monday the 10th. We so appreciate you being with us. You appreciate what we do. We only ask that you go to iTunes, subscribe to our podcast, give us a 5-star rating. Also, if you want to be really nice, go to YouTube. Also, subscribe to our channel. We love to hear from you. Go to our website, chartingwealth.com. Let us know what we can do for you. Been answering a lot of emails, answering a lot of your questions lately. Let us hear from you. We'll write back to you as soon as we can. God bless. Thank you so much. Hope this new week is a great week for you. From chartingwealth.com.